trade and business.
Do you have to convince them that you're not going to over-regulate? I mean, when I think sometimes of the UK and Europe, the fear is that. Too much regulation.
On the contrary, by the end of next month, we will have passed the biggest piece of legislation I expect of this whole parliamentary term on planning and infrastructure. And that is all about ripping up unnecessary planning and regulatory rules to make it easier to build data centers, train lines, nuclear power stations, offshore wind projects, the cables to get the energy to homes and to businesses. Our Prime Minister, Keir Starmer, has also made a commitment to reduce the burden of regulation on businesses by 25% during the course of this Parliament. We've already started that in financial services by taking out regulators. We've changed the leadership team at the Competition and Markets Authority to make it more pro-business. And so, we're differentiating ourselves as well within Europe as being a country that is ripping up the planning rules, tearing up unnecessary regulation to ensure that you can actually get things done in Britain. And that's increasingly the case. And I think investors, whether that's sovereign wealth funds, private equity, venture businesses, can see that this government is moving forward at pace with measures to grow the economy.
Good. Music to people's ears, I'm sure. Here, Your Excellency, how do you prioritize AI in a national strategy, and how do you, maybe if you could just work it in to figure out who your friends are when it comes to partnering with countries like China or like US on AI?
On AI, we are closely integrated with Western ecosystem, even though there are some components from other countries. I think the way we see AI and the whole digital transformation, this is one area where you have to be open, but at the same time, to some degree, sovereign, it's one of those nodes that you invest. That's why we are trying to build our own Starlink, low orbit satellites to provide internet. We're investing very heavily in fiber infrastructure. 5G Plus is well underway. We are investing in nuclear power plants to provide the base load for AI. So we're doing everything. In terms of human capital, we feel that we're blessed. Every year we get about 940,000 university graduates, and increasingly more in these areas. So human capital-wise, we're in good shape. Infrastructure we're developing. And regulations, we did not join the European bandwagon in terms of Digital Market Act. So we've avoided that. And I think we want to look what's working before we move. So yes, we are investing heavily. It's one of those niche that could provide huge, immense boost to productivity. So we are quite optimistic. But again, we're trying to lure some international hyperscaler, investments. Having said that, some of our regulations, such as trusted cloud, keeping data, while cross-border data is allowed, but storing data locally, they're telling us that that's getting in the way.
So we're out of time, but it sounds like the three of you are all in the middle of negotiating deal, like some sort of trade deals with each other.
Yes.
Are we going to, was this helpful? Are we going to get this done?
Qatar, Turkey already
yes,
done.
Yes, we are going to get that done, aren't we?
Qatar, GCC, UK, almost done, I should say.
Okay.
So, with UK, we're almost done. With European Union, we're trying to upgrade the customs unions that we have to expand it into public procurement, services, and agriculture. But I think we're more optimistic that our deal with UK will be concluded soon. EU is more complicated, typically.
It would have been cool if you announced it on stage, but that was close. Thank you all very much for joining the conversation, and thank you for being here. Thank you.
All right, ladies and gentlemen, I want to thank Sarah Eisner. Sarah, we almost closed the deal on stage. That was a good effort. I want to thank also His Excellency, the Minister of Turkey, for talking about AI, how they're investing heavily, and how also Rachel mentioned that they are getting rid of unnecessary bureaucracy that might impede progress. I want everybody now to swivel your seats to the middle of the room. That's where we're going to have the next Board of Changemakers on Finance. But before that starts, I have a poll for all of you. We have talked about whether a recession is possible, yes or no, and now we want to hear from you. So if you can scan the QR codes on the screen with your cell phones, we would love to get your input on whether a global economic recession is likely in the next year, yes or no. We have people that have started to vote right here. Thank you so much, sir, because we're going to announce those results during the next panel. So make sure to take out your phones and vote. And now, before our next board, let's please watch this video, everybody.
A great unraveling is underway. Tariffs and trade barriers are rising. These fractures are straining shared systems, from financial networks to energy grids, even to academic research communities. Yet, as old ties weaken, new alliances are born. BRICS now spans 10 nations, representing over half of humanity. Proof that fragmentation is not disintegration, it is realignment. As the world fractures, new centers of gravity form. We see the same pattern in our daily discourse. As debates polarize, divisions sharpen, but groups grow closer inside their own beliefs, united more fiercely than before. And here lies the paradox of fragmentation. The more divided we become, politically, economically, socially, the more we create new bonds. As investment and regulation accelerate, the question is clear. What is the new architecture of trust in a fractured world? In an age pulling us apart, true leadership will be measured by how we come together. Let us unite to unlock this paradox by promising to build bridges even as barriers rise, and by rejecting a future shaped by fragmentation to forge one of shared purpose, resilience, and dignity for all.
Wonderful panelists. I could not be more happy to be here. And then we put basically everyone in the audience to work because we have a panel. Mariana gave you clear instructions. And you know boards, they're a little bit competitive, so we're going to try and get more people voting for this than ever. So the question was very simple. Are we expecting a recession, yes or no? So I hope everyone got the QR code. And we'll see what that result is. But demographics, debt, deglobalization, of course, all set to weigh on the pace of expansion. Artificial intelligence may yet prove to be significant productivity driver, but its game-changing potential remains unproven at the macro level. Many see the long-term outlook for global growth may be uninspiring, but that also means there are a lot of challenges actually and opportunities for investors and certainly for financial services. So we have the results of the poll. Do you think a global economic recession is likely in the next year? 60% of people in the audience say no, 40% say yes, so this is good. We have an optimistic bunch with us today. Thank you all for joining us. So we have 55 minutes, 11 panelists, so let's get straight to work. Jane Fraser, let's start with you. When you look at financial services in general, how they will be transformed but also disrupted, if you look at AI and private markets, where will the biggest transformation come from?
So I think both are going to be transformational. And frankly, financial leaders, we're all going to have to win at both of them. Here's how we're thinking about it. On the AI front, it's probably the biggest shift, but it's in the longer term. We're just beginning to unleash the potential in AI at the moment. But it will be the rewiring of a lot of the global economy. It will be of financial services. And I think on AI, we can see it in 3 different areas. The one that's more immediate, which is the operational benefits we're getting. As we're replacing manual tasks, we're able to move data at greater speed. We're able to find anomalies faster. So the operational side, I think we're all beginning to see bottom line benefits. You have the revenue side. The one that's exciting immediately is personalization. People don't always say, oh, financial services, empathy. I think this is our opportunity to make some of the changes there. But it will change business models. It will change revenue models. I don't think we quite know how yet. And then you've got the risk dimension. And that's one where it's going to enable us to manage risk better, but it's also going to create new ones. And the bottom line for us all on AI is not whether it's going to happen, it's how thoughtfully and well do we execute it in our businesses. Private credit, that one is happening pretty quickly right now. We've got to decide, is this a tug of war or a team sport in private credit as banks? It's usually more fun to play in a team sport. But there's some areas where there's a zero-sum game. There's other areas where it's the benefit of both. Right now, it's not a huge part of the business model, but the inflection point is where private credit and AI meet. And I think that's what we're seeing in particular in the Kingdom. Is how is the AI infrastructure getting built out? How are we going to finance some of the models that are out there? What's happening to the power equation? And this is where it's not easy. This is not cooker-cutting finance. So banks play an important role in structuring, as I'm sure you'll hear from all of us, different deals we're working on. And private credit is an important part of the equation. The world needs both of us. So let's try and make this more of a team sport and as big a pie as possible. Let's not be complacent. There's going to be winners and losers.
I like the way you put it. Is it a team sport or not? Venkat, what's your take on private markets, but also AI? Because AI could accelerate really quickly.
As always, it's hard to follow Jane because she just said all the good things. But I do think on AI, just to add first, it represents obviously a great general purpose technology which can have a transformative effect, not only in how we run ourselves, but how we present ourselves to our customers with empathy, hopefully. Equally, when we think about our workforce and our colleagues, it is an opportunity and a risk. It's an opportunity to create a much more dynamic, enabled, empowered workforce and help it manage the transition because some jobs will transition. It's a risk because if you don't pay attention to it, then you can end up with divisions in the workforce and more disruption than you'd like. On private credit, at one level, this is something that banks have been doing all the time. And when we think about a definition, at least the definition I like to use, is that it's credit that does not come through banks and does not come through the public markets. But it comes through lots of recognized players, insurance companies, asset managers directly, including what we call the private credit funds. And I think it should be a team sport. I think there are some things banks will not find it appropriate to do under their capitalization rules. Others should do it because the world needs the credit. And banks should work with them, either by financing them or even working jointly directly. But that's the best way to get credit into the economy.
Bill Winters, where does this balance of financing power actually lie between traditional and private credit?
I don't think it's a balance. I mean, I'll pick up where Venkat left off, which is that there's demand for credit and there's supply of credit. And different people are in a different position to provide different types of instruments. So banks are heavily guided by our regulation. It's a fact. And if I were a regulator, which I've dabbled on that side of the table from time to time, I would also be concerned about banks that are leveraged 8 to 10 times, that have a systemic role in many countries. And I'd also want them to operate with a lower tolerance for solvency risk than a non-bank. No. But how are things working out? The non-banks are much less leveraged than banks. they're providing credit, buying assets in a safe and sound form that presents, as far as I can see, much lower systemic risk than banks. That's good. It's good for the economy. But we need each other because they don't have tens of thousands of people, hundreds of thousands of people around the world scouring the market for good credit opportunities and providing the rest of the banking services that we all on this panel do one way or other, where we can understand that customer, that credit, and provide a broader range of needs. I mean, they don't want to build that infrastructure. And they don't want to take deposits. So, I mean, it's perfectly complementary. It's not to me about balance.
Chairman Mikke, you also see new entrants because of fintech. So how do traditional banks actually deal with the new entrants? How does that change the landscape?
Okay, thank you, Francine. Well, let me take one step back to think about actually who we are. It was already 30 years ago when Bill Gates said, banking is necessary, banks are not. And since then, financial innovations have brought various new players to the market. Likewise, open fund, private equity, private credit, fintech players, and so forth. And indeed, now NBFI accounts for more than half of global financial assets. So some may argue that the traditional banks are becoming less relevant. Is it true? Let me be a bit provocative by arguing against it. One, our access point to a financial service by the individual. The number of banking accounts held by 15 years above and has been increased from 3 billion accounts in 2014 to now 5 billion accounts. And the global account ownership ratio has also increased from the 50% to now 80% over the past 30 years. Two, banks have been indeed providing financing to fintechs and the non-bank sectors. For example, in the United States, the bank lending to a non-bank sector has doubled over the past 5 years. Finally, banks are even distributing the products generated by those non-banking sectors as well. So that all means the banks remain an indispensable intermediary. And with that, however, we happen to be complacent. And what we need to be conscious of and what need to be prudent is, as a responsible intermediary, upon the intermediation, that we have to be careful about what we are going to intermediate in order to preserve the overall safety and soundness of the World Bank systems.
Mr. Asselin, how do you expect actually Saudi banks, but also broader Middle Eastern banks to change because of disruption, which could be new entrants, which could be private markets, so what you're selling, and AI?
Francis, we are changing already. So when we talk about fintech or disruption or digital banks, I always respond by saying we are a fintech. We are a large fintech. We are a digital bank. So the advancement of the innovative solution that the banking sector in Saudi in specific, but at large at the Middle East, I think it comes in a very strong competitive advantage. And we are moving toward full automation. It is also time to unlock the wealth of data that the banking sector sits on and utilizing the AI to capture all the benefit that we see coming from the innovation agenda. Today, I'll be surprised if there is any financial institution doesn't take AI in the heart of their strategy, and that's embedded in every division in the banking sector, the financial institutions. So today, the winning strategies, the winning financial institutions, the one that embed and capture the best application of AI in terms of operational efficiency, risk mitigation, but also in the future, in the near future, the uplift on the revenue side.
Thank you so much. Mr. Takashima, how do you see it evolving in your country?
All right, in Japan. Well, first of all, thank you, Francine. And it's great to be back to the panel, all good friends of mine, and also it's an honor to be a part of you. And first of all, in Japan, similar changes taking place. And the one thing I have to tell you is both for the development of the private asset industry as well as the fintechs, we are a little bit behind. But the tendency or direction of all the changes should be the same as everybody just talked about it. But if I take a look at the situation here, I have to start to emphasize that change is good. Change is always a source of the transformation. And there is a track record, a history of financial industries to take the chance of the changes, to transform ourselves. But of course, this type of change is significant, but still I think there should be a lot of chances. I take that side of the coin. That is, we have to, what we have, the significant customer base, both for the corporate, consumers, communities, financial institutions, and the firms. I think that meaning is significant. To take advantage of those existing customer base, perhaps we should work together with private asset players and the fintech players, working together as a partner to deliver the better services. If we go through the direction, I think we see the more opportunity than the risks.
Jenny Johnson, as Franklin Templeton pushes further into, of course, private markets, but also private credit, what do you look out for?
Well, so just in the evolution of private markets, I mean, first of all, and Bill, you said it, right? Let's face it, I mean, it's not like banks just decided they didn't want to keep lending. The capital requirements changed. They couldn't lend at the same amount, and supply and demand, there became an opportunity which was filled by the market. And so that's where the creation of private credit why it's evolved to be so big, and I don't think that reverses. So at Franklin Templeton, our job is to provide the greatest breadth of capabilities to our clients, whatever their needs are, and whether it's traditional fixed income or private credit, that's part of it, whether it's equities or private equity or venture, whatever. So all of those things have to be part of it. Where I think it's evolving, and the technology, I think, of tokenization is going to help in this, is that we need to figure out how to package this so that it is fairly accessible to all people. Today, it's really been just institutions that have benefited from private markets. And in private credit, there's an argument that it ranges about 150 to 250 basis points more in returns than a traditional credit that is liquid, right? But it's illiquid. But that's meaningful if it's in your retirement plan. And so I think what we're starting to see, and what Franklin Templeton's very focused on, is how do we package these? And in some cases, it's hybrid with traditional and private assets in there, appropriate products to be suitable to whatever a particular client's liquidity capabilities are or needs.
Thank you, Jenny. Ronald Hanley, what do private markets actually mean for asset managers?
Well, I think that as the entire panel has talked about, the role of private credit is to fill a need that the banks could no longer provide at the same level. I mean, what we saw in 2008 was a great concentration of risk on balance sheet. Regulators didn't want that. And private credit is exactly the opposite. It's the distribution of risk. And this is where asset managers come in. They can provide that supplement to the marketplace. And I think what we've learned over the past several years, to the point about it being a team sport, is that banks have an incredibly important role to play in origination, can probably originate more credit than they can actually underwrite and keep on balance sheet. And this is where this partnership can come into a place. But it's also the point that Jenny just made. Until recently, the access of the retail or even the affluent investor to private credit has been limited. There's new structures that make that, new regulation that enable that. And frankly, there's had to be an enormous upgrade to the operations to be able to do this. Now, there's still issues with this in terms of how we think about liquidity and the liquidity mismatch. So I think this is where regulators and the market need to come together and really think about, do we want daily liquidity or do we want daily valuation? Those are two very different things. And we should be thinking about what are the real liquidity needs of the investors here. As Jenny just pointed out, retirement investors don't need to be getting in and out every day. And if you can have a structure in place that doesn't have that kind of liquidity need, then you can actually deliver the benefits of private credit to the retail investors.
Tony Alamulu, how do you see this developing actually in Africa? Again, is it private markets or is it just challenger banks that means that you need to look at transforming your institution?
I think the bank I chair on the continent operates in over 20 countries and has over 80 million customers. So we have a fairly good understanding of the financial landscape on the continent. First is that financial inclusion is a bit poor on the continent. Secondly, we have a great deal of informal sector on the continent. So the headache we have in Africa is slightly different. What we want to do is to use both methods, traditional, private markets, and digital technology to bring the market and grow a deeper market on the continent, because access to capital is difficult, and two, we need so much private global capital on the continent to help catalyze infrastructure development. We talk about AI here, but to fire AI on the continent, you need to improve massively access to electricity, which is a challenge on the continent. So the development of the private market on the continent has been there for a bit, but what we want to do of work galvanizing resources, and this is a great opportunity to encourage everyone here, fund managers and allocators of capital. There's so much opportunity in Africa to invest in, but capital deepening on the continent is required. I would say that it's a combination therapy. We need regulators to have the right mindset. We need private global capital to find investable opportunities on the continent. We need traditional institutions, digital institutions, fintechs, all of us working together to harness. The challenge is big. We have resources, but ability to harness the resources and make the capital in Africa work for African development is, to me, a critical point.
Thank you. Sushantan, how do you see, again, this changing actually the landscape of your institution, but also do you feel comfortable with a lot of private money going into private assets?
Well, Francine, banks intermediate money. We take deposits, we either lend it out, we effect payments, or we distribute it, right? We distribute it to public markets, to stocks, to bonds, to funds and ETFs, or we now get involved in digital assets. So there's different layers of assets that we intermediate. But what form factor? It could be physical, it could be digital, it could be on the blockchain. But the point is, underlying all this is a strong element of trust. Who's going to put their money with you if they don't trust you? And if they don't trust you and you are very digital, then 3 clicks and your money's out. So as banks are regulated entities, we've got high AML compliance regulations, we've got liquidity coverage ratios, capital ratios, etc. Sometimes there is regulatory arbitrage between us and the fintechs, but it behoves us, therefore, to do what Bill Gates said, which is, stay relevant, which means whilst we have their trust, we have to improve on our form factor. We've got to be as good as the fintechs in delivering a great digital UX, but underpinning all that is don't mess up on the trust, right? Stay trusted, stay safe, so that they're going to keep their money with you long term. So all in on digitalization, all in on AI, but let's not forget the basics.
Yeah, and actually remembering the basics goes back, Simchabalala, to liquidity. So how do you see that, changing on how ordinary, for example, investors can get their money out quickly if needed in some of the newer markets?
So Francine, first of all, throughout the continent, people follow the basics of banking, just as everybody has said. But let me tell you 2 little stories that will pull together the themes. First of all, there's a company called Optasia. It was started by a Nigerian Lebanese man who's now based in Dubai. The company has 121 million users. It operates in 38 African countries, in Southeast Asia, as well as in Latin America. They use 5,000 points of data, and they use those 5,000 points of data per user using AI to determine the score, the credit score of that individual. That business is going to go to be listed on the Johannesburg Stock Exchange, and one of our competitors, to take Jane's point, is going to buy 20% of that business. We have taken that business from cradle in 2013 to its listing. It's using infrastructure, it's using financial services, it's using our intermediation skills, and each player is playing the appropriate role in the transaction. The second story, and I'll stop there, relates to a company called Barlow World, which is owned currently by people on the stock exchange. The Zahid Group out of this country is in a 49% partnership with a local entity to buy out the company and take it private. Again, the GCC states investing on the African continent, each player playing their appropriate role, providing liquidity to the financial system and using AI, using the infrastructure and using the capability of financial institutions. The proposition, Francine, is that Africa is open for business.
Thank you so much. Venkat, you're a former chief risk officer, so you're perfect to talk about AI. We keep on hearing that actually AI could vastly reshape the way that banks, for example, take credit decisions. Like, how do you see AI enabling the bank to do better whilst keeping everyone safe?
Yeah. I'll never live this down. I think the mechanics of underwriting credit and how quickly you can do it, how much information you absorb, how you keep it up to date, at the first blush, all of that can be transformed by AI. We're doing it. Then, I think there's a set of decisions you could make in credit which are relatively automatable, generally small, generally alike. So, you know, a mortgage of a certain type, a loan of a certain type, credit card decisions. Then there are the very large decisions which require the more fundamental issues of client selection, understanding business models, underwriting the way a company has independent financial controls, strong financial controls. I think that's going to be human for a while yet.
And yes.
No, I agree with Bank in terms of banking sector being regulated, highly regulated, with many rule-based processes that can be totally automated and done by robotics or by AI. But human touch is really important, and important in certain decisions that definitely require the intervention. And looking at the AI, I think we need to be very careful because it looks very tempting when you look at the application in the financial sector of how much it can bring from an efficiency or uplift in the revenue. But I think you need to be careful in applying that, in ensuring that risk is always mitigated, ensuring also that your human capital is being elevated to be able to deal with what's happening on the AI. Technology and the human capital needs to be reskilled and elevated to handle any situation when it goes south, potentially.
I guess it has to go together. Jane, you were talking about AI, and I think that the number is incredible. You said that Citigroup, AI is saving your coders 100,000 hours of work per week by automating code reviews.
Yeah.
So what happens after that? Can you do more of that?
Yes. I think there's a number of different pieces where AI is really starting to make bottom line impact finally. So it's not just the shiny objects. I think I heard the cheer around our firm globally when we told everybody that they would be able to do the performance reviews. The AI tool we have will do the first draft of them. So there are ways to make it popular with your organization by eliminating some of the greatly dreaded annual processes you have. Agentic's the one that I'm seeing the big change, because I think the first wave of AI has really been this automation of tasks that have been heavily manual or error-prone. Where you start seeing a game change is agentic. So we work with cognition. Coding that had been taking our top teams, PhDs, a week and a half to do is being done in 3 minutes. And it's extraordinary, the quality. And I think the other change we see is it's like washing dishes. When you wash dishes by hand, it's one process. The dishwasher results in a clean plate, but the way it washes the dish is completely different. And that's the bit that is difficult right now, is how do we get our teams to look at a process end to end and completely reimagine how they've done it manually in the past to now, how do you think about a completely different technology being applied to it? And that's why I think we're at the beginning of what this means.
Bill, you're also a veteran of the last financial crisis. And so when you look at some of the things that went wrong last time, how do you manage AI in a way that we don't replicate some of those mistakes?
No, I think we talk a lot about AI. It's central, and I think the comments of Jane, Tarek, and others are spot on. But there's two massive technology changes that are going on at the same time right now, and that will transform finance in a very fundamental way. The first is AI, and the second is the digitization of money. Yeah. The digitization of money, and this isn't, and we're not talking about cryptocurrencies, we're not talking about stable coins, we're talking about everything that we do being digitized, everything in our lives being digitized. That calls for an entirely new financial infrastructure, entirely new. And some of that will be provided to us by third parties, and they'll charge a lot for it, as they always do. And some of that will be built ourselves, and some of that we'll build amongst ourselves. But the digitization of money, which will leverage AI tools, and AI will leverage this digitization, is a fundamental change in finance. And I've been doing banking for 42 years, and there's been two paradigm shifts in my 42 years. The first was the derivatization of all financial assets. That led to the financial crisis. I can tell you, when I was at my old place, JP Morgan, we did a lot of the early work in that area. It was great. JP Morgan is still doing really well, I think, as far as I can tell. And it kind of survived the financial crisis because they took this super powerful tool, and we took that super powerful tool, Chief Risk Officer, right? Here we are, at JP Morgan. They took that super powerful tool and used it prudently. Other people took that super powerful tool and used it either unwisely or imprudently, and for the most part, aren't there. And as we get into this new age of the digitization of money with AI, powerful tool will be used hugely constructively by most people, will be abused by some, and we've got to keep an eye out, and will be used incompetently by others, and we have to keep an eye out.
That's a word of warning. Sushan, how do you see this developing?
I think the human aspect's important. First of all, I think we all learn best by doing, and we're all going into this unknown space together, which means creating that sort of intrapreneur culture where, whether it's horizontal use cases of AI or vertical specialized use cases or agentic or generative or classic AI, it's let 1,000 flowers bloom, but put guardrails in and let's learn from everyone else's mistakes. But honestly, looking at the human aspect, it's how do you then move people who are so used to doing a certain role, right? They were always in operations or call center jobs or writing credit memos, doing pitch books, your young analysts. How do you move all these people, and they're young, how do you move them to the next job? And often I think this is taking one step back to take two steps forward. It's all about attitude, right? It's not even about age, it's about attitude. And it's really, I think as CEOs, it behoves us all to make sure that our teams are ready to take this step back, unlearn, relearn, and start from scratch, right? And learn a new skill. But assure them that, look, you've got all these tools to help you in your new skill. If you didn't know how to be an RM, now you've got tools to help. If you couldn't do, credit synthesis or whatever, or risk analysis, now you've got all these tools to help you. And so it's really the human and machine interaction and making it okay to fail and making those cultural mindset shifts. That's important.
Jenny, I know this is something that you also think about, but also then to each of you, how do you think your institution will change in the next 5 to 10 years, given all of this?
Well, I always say that here's the good news. Since my grandfather started Franklin Templeton in 1947, the mission of helping clients achieve their personal financial goals has not changed. So that's the good news. The better news is actually the tools to do it and customize it are even better, so we can do a better job at that. And so, I look at it right now, and I two comments. On what Sushan said about the attitude, I jokingly say that, my daughters are a singer, an actress, and a documentary filmmaker, so that when my son became a computer programmer, I was like, oh, thank goodness somebody's gonna have a job. But the reality is, that's a lousy job in the sense that it's not gonna be long. Today you need to program and use GitHub and it'll help. But there are apps like Replit where you just tell it what to do and it programs in front of you. Yeah. And so back to that attitude and creativity, that's going to be incredibly important in the skill set. The curious mind, the willingness to use tools. And by the way, the younger generation are doing it every day naturally. We have to think about doing it. Yeah. And so ensuring that our organizations have younger people coming in. And then I just want to point out, Bill's comment on blockchain. Look, the entire rails of the financial system are going to be disrupted by blockchain. It is just, we personally have a tokenized money market fund that's the only one that's actually natively on the public blockchain. it calculates the yield every second. If you own it, you're a hedge fund and you own it for 4 hours, 32 minutes, and 22 seconds, you're going to get that yield. You can't do that with a traditional money market fund. And what was surprising to us is how dramatically cheaper it is to operate this, such that when we think about financial inclusion, the fact that it's cheaper to do, we're going to be able to more broadly distribute it. And so I think it's going to change a lot of how counterparties work, but it's also going to drive down the cost, and it's going to generate a lot of innovation. And the smart contract nature that is involved in tokenization, you add that with AI, and it's going to be very, very powerful when applied appropriately.
And we're putting your fund on our digital exchange.
What's that?
We're putting your fund on our digital.
Yes, you are.
Okay, we're doing business here on the board as well. Tony.
I want to bring a practical perspective to this conversation. Sitting at this table and listening to all my colleagues here, AI is like a constant. It's like commoditized in some markets. But there are some markets like the African market. This is starting, but the rate of adoption is not great. And even the infrastructure to make AI work on the continent is lacking. And so as I sit here and listen to everyone here, I'm asking myself, what catalytic thing, one thing that we can all here do to help improve the AI penetration on the African continent? Because AI is the way to go. It's all about productivity, efficiency. It's about people, their careers, etc. It's about growing, achieving common good, and in fact, prosperity for everyone. AI is key. It's key, the way to go. So I think in our credit rooms, in our board rooms, as we make decisions about funding, capital allocation in particular, about asset investments, we should please encourage and support the infrastructure development in Africa. Because it's so critical. If you look at power, for instance, I talk about this always. Access to electricity is so poor on the continent. Over 600 million people don't have access to electricity. And we're talking of AI, data, etc. You need so much power to fire this. But something can be done and should be done. And AI and the FII is about prosperity. And prosperity is when almost everyone is carried along at the same level, at the same page. So let's see in our respective boardrooms any investment decision we can make, any credit decision we can make. I know my friend does a bit of that, and she does too, to support the infrastructure, AI infrastructure development in Africa.
Could I, if I may just pick up on Tony's point. So just to take it a step further, the African continent has got geothermal in East Africa. It's got sun, it's got wind, it's got copper in the copper belt, it's got manganese, it's got the platinum metals, it's got coal, it's got gas, it's got all the minerals that the world needs for its transition. And so, Jay, how about setting up data centers in East Africa? The engineering is easy. You just dig a hole into the Rift Valley and the power pops out, and the copper is just up the road in the copper belt. However, as Tony says, Africa needs $100 billion per annum of infrastructure, but only raises about half of that. And what is needed is a combination of banking, multilateral money, and private credit. For that purpose, to unleash the banking and the private money, we need some of the Basel regulations to be changed. Now, some people have insisted on putting the pen down. We're asking them to pick it up to reduce the risk weights associated with infrastructure projects in Africa. Just some lobbying there, Francine.
Completely echoing Sim's comments about infrastructure, but I want to come back to the AI and digital assets in Africa. You have outstanding AI applications in your bank.
Yeah.
You have outstanding AI applications in your bank. We have a few. Jane has a few. The talent in Africa is as capable as any talent in the world. You're not going to build the large language models.
It's more productive and it's cheaper as well.
It's sometimes cheaper. But the no, I'm just saying that I think this is the greatest opportunity in Africa in our lifetime for Africa to blossom, and it's because you absolutely need the infrastructure. But the creativity of certainly the people we see and where we operate across the continent, as you know, the capabilities that we see, the entrepreneurial spirit to overcome some of the obstacles, including the infrastructure obstacles, is just outstanding. So
And if I can jump in, and I think this is where Saudi is playing such a constructive role, and we've seen it in recent FIIs as well, that the US and China have been lacking in different ways in supporting the infrastructure. I think the attention, the care that is coming from this part of the world in looking thoughtfully about how do we look at the right structures, what are the different types of infrastructure plays that can be made, look at what Aqua is doing in water in Africa. Like, they're on a mission. They're looking long term, they've got a vision around it, they're driving this forward. I don't want to underplay. We've talked about there's no transition without transmission. Water's important, the food's important. Saudi is playing a really, really important role, and many of the global champions that are emerging out of PIF and building out the ecosystems are also going to be critical partners. And I think we all see that and acknowledge that.
Thank you, Jane. Ron, Tony was talking about the pace of adoption of AI. This was more related to infrastructure, but in general, how are we overestimating or underestimating actually how financial services will change because of AI and disruption?
Yeah, I think this is evolving like many new technologies. All the attention is being paid on the actual hardware itself, and certainly that's where all the investment has gone. But I have to believe that all the value is going to come out of the applications. And I think the challenge for us here, most of us are running very large institutions, is how do we actually capture that value? There's about 150 years of management science that's being thrown out the window. And the challenge for management, particularly for the middle manager here, is quite high. Because I could believe the 100,000 hours, but how do you capture those? What do you do with 100,000 new hours? Do you just reduce your staff? Do you say, no, I actually want my staff to do more? So the real science here, in my mind, is thinking through, for a particular application, is there high, what we call high AI exposure, meaning there's lots that AI can do, some of these data-intensive, large language-intensive kinds of things. And the second thing is, what's the AI-human interface here? And so for things where the interface is low, like reconciliations, we do a lot of those. We do a gazillion of them a day, right? There's a big AI opportunity. There's certain things, though, where there's the AI exposure is high, but also the human intervention is high. So you think about investment research. You think about all the things that when we started our career, whether it was at a consulting firm or an investment bank, all the stuff we did at 4 o'clock in the morning, that probably can be done by somebody else. But then there's the things where you have to make a judgment on this, where actually AI is not going to be helpful. Some of the things you talked about, the creative side, but strategic planning, negotiation, just creativity, how we think about all that. That's what we're asking our middle managers to do now in terms of figuring that out, and how do we actually equip them to do that and empower them to do that.
That's a really good point. Mr. Takashima, how do you prioritize or enable your staff actually to prioritize what they need to do for transformation?
Yes, I think, yes, I agree, AI is a significant, enabler at the same time, disruptor for the existing services of financial institutions. But at the same time, I have to emphasize that it is customers, it is a society, it is a community who choose the services from all the service offering from the financial institutions or big tech or fintech players. That means I think it is coming back to the Sushan's comment. I agree with you. Human touch is very important as far as it is related to the existing customers who likes to continue the banking with some specific institutions, even though the banks is trying to implement new services based on, for example, AI-driven, automated services or otherwise. But some customers don't take it. Particularly, the wealthy individuals or the corporations who have very complicated needs. In those circumstances, I think it is important to develop the AI, the supported human, the touches of approach and proposal and dealing with the customers. At the same time, of course, we have to also develop automated, AI-driven services. Sometimes, even in Japan, we are developing those automated services, for example, 24 hours, 7 days a week, AI chat type of services, in addition to the device, human-based advice, even for the various interviewers. I think those type of things, there is still, we could work around to take advantage of the existing human resources.
Thank you. Chairman Mike, how do you see also, again, when we look at new entrants, given all of this, how do you prioritize? Bring it home. Yeah, you can bring it all together in 30 seconds.
Thank you. Very kind of you. But having heard lots of arguments, yes, AI is certainly a transformational innovations which we have to live up with. And we discussed so much about opportunities and some challenges as well. And I think that in my view, the biggest challenge is adaptation. We all have adapted every evolving technologies and innovation in the past. But this time around, speed of technological evolutions is unprecedented. Whether capacity for human beings could adapt to that speed of evolution is one challenge. And we know, as the CEOs and the chairman, we have to reskill, we have to retrain, we foster those talents within our organization. Yes, we do. The challenge would be then whether our customers could adapt to that speed of a technology evolution. We have to be responsible to engage our clients, our community where we serve, to be on exactly on this evolutions of a technology. That is what we have to do as a responsible financial institution. Thank you.
I have a comment on the human capital side. I think we are blessed in this country, among many things, of our human capital. We're a very young population, so we're dealing with young customers, and we have also a very young employees. The digital adoption is very high, which really enables the transformation, any technological transformation, to be much easier in our country. And I love it when I speak to young employees in the organization, and they kept asking us, what is the bank strategy on AI? What are we doing? What's next? When are you going to train us on AI? This is really a blessing that we've seen in this country, and I think this will enable us really to leapfrog when it comes to our innovation agenda in the country as well.
So I think I have 8 minutes left, and the FII were quite clever in having this idea of a lock and a key. I don't know if you've noticed, this is actually a key where, the platform. So this is the top of the key, and then it goes down like that. So let's just go around, in clockwise order, in what you are most optimistic about. So the key to unlock success for the next 12 months.
I think I did allude to it. I think we have the human capital power that will enable and make the transformation from an innovation point of view much easier. We have also an excellent ecosystem when it comes to innovation. So today, the public sector and the private sector partnership on innovation, it's at the highest compared to, I would say, other countries. And that really will enable the success in our innovation transformation.
Tony?
For me, it's back to the same chorus. To some, it's about AI adoption. To others, it's about AI accessibility. We should, as a global community, play our own role in helping to create AI access so that all of us grow simultaneously.
Is that happening?
It's not happening. That's what I'm saying. There's accessibility. But for it to happen in some regions, access, infrastructure is so critical. The capital for that infrastructure is not available. We're sitting at this table, we have people who allocate global assets. I'm saying our capital. Let's see how much of that we can concretize or commit to deploying in helping to create the AI infrastructure in Africa that will help us begin to talk about accessibility, then adoption.
Jane, what are you most optimistic about?
So we're at this inflection point that we're talking about that's probably the biggest change in technology in our lifetimes. And at the same time, there's a bit of a feeling that the world, there may be another shoe to drop here from macro or geopolitical. We don't know where it will come. What makes me optimistic is how resilient and adaptable companies have been, consumers have been, humans have been over the last 5 to 6 years. There's been a heck of a lot thrown at everybody, and look at where the world is. So what gives me optimism is that we keep surprising ourselves. Let's keep going.
Very true. Jenny?
I'd say every time there's new technology, there's always this prediction of the demise of jobs, and we're going to have all this unemployed people. The internet had it. You look in history, it happens over and over. And I'm optimistic about humanity because we always find more things to do. And when you have new technology right now in companies that are growing in a growing economy, which I'm optimistic about, to Ron's point about what do you do with those 100,000 hours, you have a bunch of tech projects that you can't do, and now you'll be able to do as long as you're growing.
Well, innovation is always come up with to resolve the social challenges and the issues. So this time around, for example, Japan is suffering from an aging and declining population. AI could be used effectively to provide that solution as well. So I hope that evolving technology will be used to resolve the many social issues we are confronting these days.
I'm optimistic because I think this technology will lead to a real evolution in terms of the client and customer experience. And I think those that apply it well can truly distinguish themselves from others. And the willingness of customers to actually tolerate bad service will go to zero because they can see what those that are applying it well are able to do.
So, question in the next 12 months, you said, right?
Yeah,
So,
then I'll ask you if anyone's expecting a recession, but for the moment we're focused on the optimistic thing.
I'm optimistic about the Japanese equity market.
About the momentum and the structural growth that you see around you. So, and as an Asian bank, I have to tie it back to Asia somehow. So I'm optimistic about the trade flows between Asia and the GCC. A lot to be done there.
Yeah. Big week for that.
Like Sushan, we see $59 billion from the UAE, 26 from Saudi, and about 9 from Qatar. We think there's more to come, being invested in private equity and in private transactions. And because Africa is getting healthier, wealthier, and more productive, and is in need of this greater infrastructure I was referring to, there are huge opportunities for anybody who's either facing retail customers or wholesale customers. We are open for business.
Look, I think there's tremendous opportunity from technology. I think we need to be bold, but we need to be responsible. Bold in adopting it, responsible not just to the bottom line, but to all the stakeholders in society, including, of course, our own employees.
Bill?
I'll be a bit more macro. I'm extremely optimistic about the shift in the center of intellectual gravity from stability to growth. After the financial crisis, I think we over-index stability, we under-index growth. That's changing. We can't forget about the stability. That's hugely liberating for billions of people around the world. And the second thing to note about optimism is I think we're realizing the value of peace. And while we obsess quite correctly on the remaining incidents of war, we're in a very peaceful world right now, actually, by any historical standard. And I hope that the value of peace becomes even more clear. I think it will, and it makes me optimistic.
40% of the audience thinks that we're going to see a recession this year.
I disagree. I don't see a recession.
Does anybody agree, actually, with headwinds? No, we have a very optimistic board. This is like happy days. Venkat, any worries out there in terms of recession or a significant slowdown?
I mean, there are always worries at different points, but not of a recession, no.
AI valuations? Give me something. Do you worry, Jane?
There's going to be, I think, every statement of the blindingly obvious, there are going to be winners and losers in the AI. When we look at the amount of money that's going in, not all of that is going to be deployed effectively. But there is a huge need, like the infrastructure need, the data need. I don't think anyone's going to say it's been overbuilt, but not everyone will be a winner.
If you just want, I mean, look, 2026 is not going to be a problem. U.S. debt It's going to be a problem someday. It's not a problem until it's a problem. So I don't see any problems in 26.
What a wonderful panel. Thank you so much, everyone, for joining us. Thank you.
Thank you. Thank you.
Thank you very much.
Take a lot of water.
Thank you.
All right, everyone. I'm sure all of that optimism has worked up your appetite. So I'm going to go ahead and send you off to lunch. Lunch will be served at the Grand Cafe. Please be back here by 2 p.m. We have a massive afternoon plan for all of you. We have the CEO of Aramco, the CEO of Snapchat, so many heads of state. You don't want to miss a minute, so come and be punctual, because at 2 p.m. we're going to kick off part 2 of day 1 of the 9th edition of FII. Make sure that you grab your seats, everyone. Enjoy your lunch and network meaningfully. Thank you so much.
Thank you, Your Excellency. And before we start our first opening board of Game Changer, let me share with you in a few minutes the main results of the FII Priority Compass, what His Excellency has just mentioned. It is available from now. You will have it on the app. You were able to download it from the QR code. And it's definitely something that you can have also on the FII Compass, AI Compass. So just few results. We conducted this survey worldwide with a great partner, Ipsos, which is one of the leading polls company in the world. 60,000 respondents in 32 countries, as you can see on this first slide, which is almost all the continents are represented. And 66% of the global population. So these are the results. For the 4th consecutive year, ladies and gentlemen, world leaders, cost of living is still a major issue for the citizen of the world. Cost of living. And then equal unemployment, poverty and social equality. I think it's a call to action, as His Excellency has just mentioned. We need absolutely to fight to bring prosperity to all citizens of the world. As you can see, despite the fact that it's a major concern for our planet, for the citizen, for the day-to-day priorities, global warming is number 7. So crime and delinquency number 4 almost. Social protection system, education, then tax, then global warming, then immigration, then international tension. On the next slide, you will see how it is between the global north and the global south. So as you can see, not totally equal, but definitely cost of living is in all countries in the world the number 1 priority. Then you see a little difference between global north and global south. And definitely this notion of unemployment is a real issue, concern in the global south. International tension is for the first time in the top 10 of our priority report. This is something you will find in the report also, which is the difference between continents. As you can see, Africa, by far, unemployment number 1. While in Asia, it's more cost of living and poverty, social inequalities, while in Europe is by far cost of living, which explain so many social crises. And of course, in the MENA region, also cost of living, while in North America, same. But as you can see in North America, crime is becoming one of the top concerns. Oceania, as you can see, is the majority is about poverty. And last but not least, in South Africa, number 1 is poverty and social inequalities. This is an amazing indicator about what should we do, leaders, to really fix these issues and where we should put our priorities ourselves. Over the past 4 years, global citizens believe, you can see here what His Excellency has mentioned also, that if we think or not that we are headed in the right directions. Citizens are quite optimistic. They think they are in control of their lives, but they are not convinced that their country is going in the right direction, and more concerning that the world is going to the right direction. And this is why we see many crises happening in some countries. These are the difference between the global south and the global north. Year after year, you see the evolution and the gap increasing between the two continents. Last but not least, I think it's important to look at what are the threats, not only the priorities that our humanity is facing. So when we ask the question, what are your top concerns for you and your family? Definitely number one, having a secure job. Number two, staying physically healthy. This is why during FII we have many sessions about healthy humanity, and we are launching a big initiative that we really hope you will be joining. And of course, covering everyday living costs, saving and planning for the future, good education for the children. Last but not least, we are in Saudi Arabia, and I will be extremely objective. Saudi Arabia was ranked as one, if not the #1 country, almost in terms of people feeling good and being happy. 80% of the people consider that their own life is headed in the right direction. 89% that the country is heading in the right direction, which is really so different from the rest of the world. 60% feel the world is heading in the right direction. You see the optimism we have in the Kingdom of Saudi Arabia. Please, I think we deserve a round of applause here. 88% satisfied with personal safety and 87% happy with their life today. MashaAllah. Thank you so much. And please, you can download the report. Now, I think I am probably passing the baton to the next chapter before we turn again and we look at the central stage for the first board of Game Changers. Thank you.
Ladies and gentlemen, I'd like to thank His Excellency Yasser Al-Rumayyan for this opportunity, for bringing together this, the greatest gathering on earth. Thank you, sir, for that brilliant and urgent call to action and for your optimism. Can I get a big round of applause for His Excellency, ladies and gentlemen? Thank you. Also, one special round of applause for the leader that put together this, the greatest gathering on earth, the chairman of the executive committee and the acting CEO of FII Institute, Mr. Richard Atias. My name is Mariana Atencio. I am a journalist, global speaker, and author, and I am so honored to be your MC for day one of the 9th edition of FII. And we begin with our signature FII format, our board of change makers. The theme is geoeconomics with the inimitable moderator, David Rubenstein. The floor is yours.
Good to see you. Okay, we have an all-star panel, and there is no way to do this properly without doing it alphabetically. So I can't decide who I should ask first questions, so I decided to do it alphabetically by last name, if that's okay. So why don't I start with Bill Ackman. Bill is the CEO of Pershing Square, and you've been very active on social media of late, I think it's fair to say. So does that help your business or hurt your business? And what's been the impact of being so active on social media?
I think it's very helpful. One, my principal driver in life has been independence. That's motivated me to be successful, and free speech has been a very important thing to me. So it's sort of aspirational for me to be able to speak so strongly about things I believe in. And then second, I think the things that I've talked about, so my advocacy has been about everything from viewpoint diversity, against discrimination, against terrorism, in favor of capitalism. And, I think people who I partner with share those values, and if they don't, I probably would rather not partner with them.
All right, you've been particularly active recently in decrying the possibility that a particular candidate might be elected mayor of New York. Why do you care so much about that, and will New York fall apart if this candidate is elected?
New York's been very good to me and my family. Been New York City residents for over 100 years. And it's the most important financial capital in the world. And I think there are having a socialist mayor, I think, would be catastrophic for New York. While he's correct, as we saw from the survey, affordability is the #1 issue, actually, for many people in New York City. He's correct on the issue, but he's incorrect on the solution.
All right, so who's going to win the mayor election?
I actually think we have a shot of Cuomo winning the election, but we have to have everyone on this panel tell everyone who works for them to show up on election day or before. It's a critically important election for New York.
Okay, Christian Aman, you are the CEO of Qualcomm. Qualcomm did a spectacular job in the mobile telephony world and with its proprietary patents in terms of things that needed to be in cell phones. What are you doing to take advantage of the next wave in terms of artificial intelligence? And how are you repositioning Qualcomm to be a leader in artificial intelligence?
Yes, look, Qualcomm has been changing a lot, I think, for the past few years. I think what we realize is some of the technologies we have developed for the mobile industry, and given the scale of the mobile industry, they could be incredibly disruptive for other industries. And when you look at what's happened with AI, it's a new form of computing, it's a new form of software. This is going to change every single computer that we have. And that's not only what's happening on the data center, but also what's happening on phones, on personal computers, on cars, on industrial machines. We think that's an incredible disruptive technology that will change. It's going to be a big change for consumers. It's going to be a big change for some of the enterprise. I don't know yet how best to compare. I remember when I started my career, we have to go in and get memos from the fax machine and start writing new memos back. And then if you look at the combination of computing and internet, what has done for consumers and for the enterprise, I think that is the kind of change. And I think it's going to create an incredible opportunity of transformation in all of those industries.
So if somebody wanted to invest in what's going on in artificial intelligence, what kind of a company would you have them invest in other than Qualcomm?
Look, I think right now, I feel that if I go back to what happened in the beginning of the internet, like nobody really knew which company won the search, the social media, the map, what happened, for example, with all the different services, the SaaS business. I think we're a little bit about that in this stage in AI. We don't know yet who is going to be the winners, but I think this space is moving very fast. I will pay attention to the companies that are becoming really connected to the consumers. I think understanding human intentions is very important and valuable when now the computers understand what we see, what we say, what we write is a change in the human-computer interface. And companies that are embracing, I think, the new agentic type experiences for the enterprise. And I see a lot of companies make bold moves. I'm actually very proud of our partnership here in Saudi Arabia. I think the national AI company, Humane, is doing a lot in agent for enterprises. I think it shows the direction. And I think we have a bright future, and all of this is going to be happening within the next 12 to 24 months.
All right, Jamie Dimon is the CEO of JP Morgan. Jamie, recently you opened a new building in New York City that cost a fair bit of money. What was the reason to build your own building? Why not just rent buildings from other people?
Yeah. So first of all, I'm thrilled to be here, everybody. Thank you for having us. Congratulations on the enormous path to peace in the Middle East, which I think is the most important thing. You got to thank the Crown Prince and the President of the United States. And that dwarfs all other things, by the way. The building is not as important. We have to compete with you and Bill Ackman and Goldman Sachs. And it's a beautiful building. We're giving our people beautiful trading floors and 15 places to eat, a great entertainment space. We try to treat our people well. I used to make a joke that these people want Pilates, yoga, and wellness, and now we're giving them Pilates, yoga, and wellness. So it's a great place to work. Our people work very hard, and wherever we are, we want them to feel good coming to work. And I also think in-person collaboration is so important for society, for life, for creativity, for cohesion. That we are back to work full time and.
You've been a leader in saying that people should come back to work and work in offices. What is your thinking about why it's important to actually be in the office as opposed to doing it over Zoom?
Yeah, because Zoom is a great tool, so I'm not making fun of Zoom, but younger people being left behind, their social lives are deteriorating, they don't get ahead, but even all of us in management, when we meet on Hollywood squares, there's not as honest a conversation, you don't have that constant follow-up. People say we'll pick it up next week when we get there. Steve Jobs used to talk about the collaboration that's accidental because you run into someone in a hall and they come with an idea. And almost everyone probably in this room, if you look back at your careers, you learned a little bit from apprentice system. You were with other people who took you on a sales call or told you how to handle a mistake or something like that. It doesn't happen when you're in a basement on Zoom. Right. And you don't get married on a basement in Zoom, and you don't meet people. So I think it's just very important to have a social life.
Okay. If the President of the United States asks you what the quality should be in the next Fed chairman, what would you tell the President of the United States?
We'll deal with whatever the reality is, okay?
Okay.
Yeah.
All right, and you're not interested?
No.
All right.
Me, absolutely dead. Are you kidding me? Over my dead body.
All right. George L. Neri, who is the CEO of HSBC. So HSBC is a major bank in Europe, obviously, and in Asia as well. How have the European banks fared compared to the American banks since the Great Recession? Have they kind of slipped behind the American banks in terms of global leadership, or are they still very competitive?
Thank you, David, and very privileged to be here with everyone. First, we do have deep roots in large parts of the planet, certainly in Asia, certainly here in the Middle East. We have been born 160 years ago in Hong Kong, and about 10 years later, we were already established in San Francisco, and that's the kind of history we built around these areas, and we've been uninterrupted more than 70 years in the kingdom. It's very important to realize that now you build connectivity through trust, through relationships, through historic understanding of local needs and local cultures, and this is really what we try to position ourselves for. Notwithstanding, we have great partners and great competitors in my American peers here on the stage, and we will supplement each other to make sure that the world is fully served with financial services.
And how is your relations now with the government of China? You do a lot of business in China and Hong Kong. How is that? Is that more difficult than it used to be, or easier than it used to be? Or both?
David, I want to say it's probably always been difficult to navigate some of the national requirements, and more and more assets are becoming national assets. Code is becoming a national asset. Chips are becoming national assets. Cloud and data are becoming national assets. But if you understand what is national assets for many of these jurisdictions, there is an ocean of opportunity out there where connectivity and supply chains and consumers and trade flows can still happen and want to happen, and this is where we need to focus our attention.
Larry Fink is the founder and CEO of BlackRock, the world's largest money manager, I think it's fair to say. Larry, you see where money is flowing in and out of the world, probably more than anybody else. Where is it flowing in right now, and where is it flowing out?
Well, it's good to be here in the kingdom. Thank you, David. It's always wonderful to see the transformation of the kingdom, and again, coming back here again, we're seeing an enormous change. We just did a transaction here in the kingdom, and we had 5x more demand than we could provide. It was for pipeline in Jafurah, and the amount of money that was interested in investing here in the kingdom was at a record level from places all throughout the world. We had 5 times more demand for investing in this one project. To me, this is just an indication of the transformation here in the kingdom, but more importantly in the whole region. And I do believe we're seeing more and more as the GCC becoming one of the major destinations for capital. This region has been typically underinvested by global investors worldwide. At the beginning of the year, we did see some modest transformation movement out of the dollar, and we saw that money moving into Europe and to other places. But that movement was from a huge overweight in dollar-based assets. And I would say in the last 2 months, we're seeing that money coming back into the United States. And so I don't see there's that much movement. There's still a deep belief in the opportunity in the U.S. You asked Cristiano about AI. If you look at the makeup of the second quarter of the U.S. economy, over 40% of the economic growth in the second quarter was CapEx for technology. And you don't see that in other places in the world. And it's that CapEx, whether it is through data centers or finding more power, gas, building gas turbines, you're seeing all that happening more in the United States than most places in the world today. You're not seeing that as much in Europe. And this is one of the big reasons for the huge gap between the U.S. GDP and the European GDP. But look, money's going to move around all the time, but I would say most global investors have a very large overweight in the U.S., and I think that's going to be the place to have your overweighting for at least the next 18 months, and we'll see how that all plays out then.
You talk to central bankers regularly. What are the biggest concerns today of central bankers about what's going on in the global economy?
I would say the biggest question from central banks is what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
Okay. Patrice Motsepe is the founder and executive chair of African Rainbow Minerals, also the president of Africa Football. So, Patrice, why is gold more than doubling in price? And in the last year or so, gold is over $4,000 an ounce. Is it a good buy now, or is it now overvalued?
Well, let me start by thanking Yasser and Richard for doing an excellent job bringing the world together. Saudi is a reliable and a trustworthy partner, and thanks for the great work. We've got about 50,000 employees in our gold mines, and we've got investments in Australia and Papua New Guinea. Gold has always been a reliable source of wealth. We love the dollar, we love the euro, but during difficult times, the world, as has recently been reflected by the central banks, they fall back, and gold plays an important part. But as an entrepreneur, we have to diversify. So we're in 38 countries in Africa, and we invest in India, in Europe, in America. But for us, Africa is the most exciting place to be. Are there challenges in Africa? Yes. Will there be challenges? But it's an incredible place for us to invest and get competitive returns.
So about 1% of private equity dollars invested around the world are invested in Africa. Should it be a higher percentage, and why aren't people investing more in private equity dollars in Africa?
Over the last 20 to 30 years, we've tended to look at investments worldwide, and we underestimated the huge amount of capital in Africa. I mean, our businesses, family businesses, we've invested billions of dollars on the continent. We can invest in other parts of the world, but the challenge for Africa will continue to be, it has to be a globally competitive destination for investment. Investors, whether in London, New York, or any other part of the world, invest in the most competitive countries where investment is welcome, safe, competitive, and the returns are good. So I'm confident, I'm excited about the future of Africa, and we will continue investing in the continent.
Okay, Scott Nuttall is the co-CEO of KKR. Scott, people say that it's difficult to raise private equity dollars these days. Is that the case? And why do you think has been difficult? If it has been difficult, or it's not difficult, why do you think people think that it's difficult?
Well, I think people believe it's difficult because we're in a particular moment in the cycle. And let's separate. There's private equity, sometimes as a term is used broadly. So infrastructure, private credit, and real estate, not really feeling the impacts of what we're seeing in the PE cycle today. I think what's been happening over the course of the last 30 years, you've had a bit of cyclicality to fundraising. And so lessons have been learned in different points in the cycle. And so what's happening right now is you probably had parts of the industry that probably over-deployed in years like 2021, and maybe underdeployed in years like 2020. And so there's a bit of a dynamic right now where perhaps some assets were purchased for valuations a bit too high, and it's going to take a little bit longer to work out of that. So what you're reading about is monetizations are taking longer to come back to investors, which is impacting how some of them are deploying capital because they need that capital to come back. But I think you're seeing more dispersion right now. We had 10 years where everybody looked reasonably bright because rates were low, inflation was low, and multiples were expanding. Now we're going to see who's good at investing through a cycle.
All right, let's suppose I really don't know where to put my money, but I think KKR has a good brand. Where should I put my money in terms of private investments these days? What's a very attractive area over the next 5 years to invest if somebody wanted to invest with you?
Well, I think we look where are there capital supply-demand imbalances. And happily, that's taking place in a number of different parts of the capital markets around the world. Infrastructure, clearly significant need. Governments, if you look at developed economies around the world, debt to GDP went up by 10 percentage points on average since COVID. Okay. So more governments are looking to work with us on their balance sheet. I'm sure that's true for a number of people on the panel. That creates opportunities. There's not enough capital to be able to feed that. But we're also seeing opportunities to invest in different parts of the world across to private credit, across private equity, and real estate, the bottom's behind it, and is coming back.
Okay, Lubna Oleon is the chair of Oleon Holdings, among other things. Lubna, how has it changed in Saudi Arabia to do business here compared to 20 and 30 years ago?
Oh, the change, first of all, thank you for chairing this and being the only Saudi on this roundtable. I have to say I'm very proud of the change that has happened in the country. I think what we see around this table is an indication of how attractive the market has become in Saudi Arabia. Earlier we heard that 24 billion 24% has been the growth of investment into the country. 34 billion has been invested from foreigners in the country. But it's all because of the tremendous change that has taken place. Ease of doing business, visas are easier to get. Lifestyle has improved tremendously. But one of our biggest changes has been the new investment law, which took effect this year. And this investment law gives foreign owners and Saudi owners equal footing in the countries. So in terms of access of capital, owning real estate, disposing of their investment, and repatriating the money. That's a tremendous change.
Okay. So let's suppose I wanted to invest in Saudi Arabia, and I didn't know that much about Saudi Arabia. What areas of Saudi Arabia would you recommend that I, as an investor, put my money in now?
Well, the country is booming. Real estate selectively is a very good area to invest in. Technology, we are in demand of great technology. So, I should go back to real estate. What I heard is data centers, and I think you are investing in data centers in the country, as well as healthcare. There's a great demand for quality healthcare, pharmaceuticals, and I have to say in renewable energy, as there is a great demand for increasing our output from renewable energy.
And is it easier being a woman investing in Saudi Arabia than it was 10, 20, or 30 years ago?
I've been doing business in Saudi Arabia for more than 40 years. It is more visible now, but I think it has been the same all along. There has been no discrimination between women and men from the beginning, I would have to say.
All right. Steve is the founder and CEO of Blackstone. Steve, you know Xi Jinping pretty well, and you know President Trump pretty well. What's going to happen when they get together? Are they going to come up with some solution that's going to improve the relations between China and the United States?
Well, David, thanks for asking that low-profile question. It's fun to be in the presence of a Major League Baseball owner asking those questions. I would say, without much hesitation, it's going to be a very positive outcome between the two countries. I think you've seen some preliminary views by the government of both countries that they've reached some kind of balanced relationship on the trade issues that have really been very visible and high profile and moved markets. I think that they've gone a long way to develop a much more functional relationship, which is good for the world. And I've been involved in some of those discussions. Both presidents want to sort of lower the temperature significantly in that area, and I think they're going to find their way to doing that.
Okay. So you invest all over the world and in many different categories. If somebody said to you, here's some money I have, I don't really know what to do with it, but I want you to take care of it, invest it, get me a reasonable rate of return, what area would you recommend that somebody invest with you? In what area? In what country or what kind of sector to get a good return?
Well, people do ask us that question. Right now, the most interesting area is in the data center, AI complex, with particular emphasis on power. Power is what's going to be in short supply. If you look at a developed country like the United States, we're somewhere between probably 80%, 85% of all the investments are going, we have an electric grid that didn't grow for basically 20 years. And now with the advent of all these data centers, you're going to have growth of at least 4%, maybe 5% going forward. The reserve to protect adequacy of electricity in the United States is sort of mandated around 15%. So if you're growing at 4% a year and you only have 15% surplus, something not so good is going to happen very quickly. And that's already happening in a variety of areas in the United States. So the need to solve this problem is really acute. And for those of us who've been involved in this. At Blackstone, we're the largest developer of data centers in the world, largest owner of data centers. So we can see this all coming. And there just simply isn't enough money for the scale of this problem without very high returns going along with it.
Okay, so David Solomon. David is the CEO of Goldman Sachs. David, the IPO market and the M&A market seem to be coming back. What kept it from coming back for a while, and do you think it's going to come back as well in Europe as well as in the United States?
Well, first of all, thank you. I'm delighted to be here. I want to echo the thanks to His Excellency Yasser and Richard for the opportunity to be here again. There's no question M&A and IPO activity have been accelerating. I think they'll continue to accelerate in this environment. I think there are different reasons why there were headwinds over the course of the last handful of years with respect to both. With respect to M&A, confidence and also the regulatory environment weighs. And so I think with respect to M&A, no matter where you are operating in the world, if you wanted to do large, interesting, strategic things, one of the first questions was, can we? And no matter what the question was, the answer was generally no. We're now in an environment where the question is, can we? And the answer is generally maybe to potentially yes. And so that's leading CEOs to be much more strategically focused. I think scale continues to matter enormously. And so if you have an opportunity to create scale and relative position, and right now people feel that there's a regulatory environment that will permit it, we're seeing an incredible pickup in activity, and I think that'll carry through in 26 and into 27, unless there's something that slows that down. With respect to the IPO market and also financial sponsor activity, and Scott, alluded to this, 2020 and 2021 led to significant markups in private investments, and then 2022 led to a different valuation equation, and it's just taken time for us to grow into that. We've now come close to growing into that, and that's leading to an acceleration. I think the IPO market is wide open for companies that want to bring, good businesses priced appropriately, and I think you're going to see that continue to accelerate, although in the U.S., with the government closed, there are no IPOs, so until we get the government open, it's hard to see that. The pace of this activity in Europe, for example, is slower. And it's slower because of the regulatory burdens. It's slower because of some of the headwinds. 60 to 70% of all M&A activity, the target or the acquirer are US-based. And while IPO activity is definitely accelerating around the world, the US has deeply embedded advantages where more of the activity will be US-based.
Do you have any worry about a potential recession in the United States? Do you see any evidence of that anytime soon?
I mean, I always worry about what can happen and what will happen. At the moment, I don't see a lot of compelling evidence for an economic slowdown in the near term. But the thing about economic slowdowns that I think is important for us to all remember is there's always a distribution where that's possible. Confidence can change very quickly. Exogenous events can change that confidence. At the moment, that doesn't seem obvious in the next 6 to 12 months. But I assure you, when we do get a slowdown or we get a change, it's going to be something that we don't see coming, when it actually shows up.
Okay. Lip Bhutan is the CEO of Intel. The President of the United States said that you should step down as the CEO because he said you had investments in China and didn't think that was appropriate for Intel CEO. Then you met with the President at the White House and you came away selling him 10% of your company. Whose idea was that, and was that an easy sell in the White House Oval Office?
First of all, thank you so much for an honor to be on this panel. And so clearly, being a good engineer, I tried to address the issue. So I set up an appointment to see him, and so have a chance for me to explain. I'm born in Singapore and educated in Singapore, and then go to MIT and then study, and then 20, 30 years ago, everybody invests in China, so I did, but it's important to address the appearance of conflict. So I've been giving my carry interest to the charitable trust, and then so in a way address that. And then during the discussion, and I told him the first term I turned around Cadence Design, make almost 100 times return to the shareholder. And as a second term, I like to make Intel great. And he said, how great can that be? And I told him the plan that I have to do it He said that we got to be a shareholders. And so I welcome him to be the shareholder. He said, next Friday, I want to announce I want to own 10%. And so he's delighted to have them as a shareholder. And it's an essential partner for us.
Is it easy having the United States government own 10% of your company, or is it hard?
No, I think it's good to have. And then if you look at TSMC, Charter Semiconductor, the government is a shareholder in that respective country. And it's an infrastructure. And it's very important for this whole resilience of the supply chain. And I think it's critical. And that's why I came back to turn around this company.
Intel used to be the leading United States semiconductor manufacturer and designer. It lost its way a bit. What do you think went wrong with Intel, and how are you trying to fix it?
Yeah, I think it's a tremendous success 20, 30 years ago. But I think complacement came into the picture, and then starting to have too many layers of management. So I decided to come in and clean up and then refocus the company to be an engineering-focused company. And tremendous opportunity in front of us. One is the AI, machine learning activity in terms of agentic AI and physical AI. And I think Intel can play a tremendous role in that. And then the other part is the foundry. And I think the world needs a reliable semiconductor foundry in U.S., and we have a footprint globally.
Okay.
Yes.
We're just about out of time, so I'd like to just ask any of you comment on this question. The United States government has roughly, I guess now, about $38 trillion of debt, and we're adding about $2 trillion every year. Does that bother any of you that we have this much debt, or you think it's manageable because we've been managing it for the last 10 years or so? Anybody worried about the debt? You are?
Actually, I think we keep looking at the liability side of the balance sheet, and I think we also have to focus on the asset side of the balance sheet. And I think what the president is trying to do is massively increase the asset side of the balance sheet, including, among other things, I think the investment in Intel is up 2x, 2.5x since the president made the investment. Look, I think it's very difficult to outrun $37 trillion of liabilities when the demands, it's very easy for a government elected for a relatively short period of time to make commitments. I do think the way we're going to get there is by growing the asset side of the balance sheet. And if you think about the government owns 21% of every corporation in America, and it can adjust the tax rate anytime it wants. It owns 35% of every American's income, and it can make an adjustment in that number anytime. So there are a lot of assets on the balance sheet of the U.S. government that don't appear that are significant. So I'm not worried about our solvency, although I would like to see a slower growth rate in our liabilities.
Yes, Larry?
So if we continue to grow at 2% a year, the deficits to a percent of GDP is going to overwhelm us. But if we could unlock private capital, unlock everybody in the room, we could grow at 3%. I mean, it's not much change, but if we grow at 3%, debt to GDP will fall. But that being said, we still are a nation that needs 30 to 35% of all of our treasury sales goes overseas. And to me, that is the biggest issue today. We're lucky that people would like to invest in U.S. dollars, invest in the U.S. economy. If that ever changed, it has a multiplier effect because the dependency on selling dollar-based assets to foreigners. We are one of the most unusual nation in doing that and having that type of dependency. In most other countries that have high debt to GDP, they have huge domestic savings. So it does not have that difficulty. So it's something that we just need to be aware of, but we could get out of this very easy as what Bill said. We need to grow out of it. We need to unlock private capital. It's not about raising taxes or lowering taxes. It's about unlocking private capital. There's trillions of dollars of money sitting in money market funds, sitting in bank accounts. If we get more and more people to move that money from a savings account to an investment account, we'll be fine.
So it's not I would say it's not a crisis, but it's very important we deal with this issue. It's a global issue. You go around the world, deficits are too high, governments are spending money, a lot of that money is being spent for consumption, not for future growth. And I would just add, what really works is good policy. We need growth policies, deregulation is free, you travel around the world, and I was just in Argentina, and you look at the policies, what they've done in Saudi Arabia, with the markets, with PIF, with education, with schools. Good policy is free, and bad policy is devastating. So we should all focus on is education, healthcare, infrastructure, proper taxation, foreign investment, and it should be used to help all the citizens of the country. And we don't focus enough on that because bad policy sinks country after country after country.
So people who want to invest in the United States, should they be worried that the dollar is going down against, let's say, the European currency for the last about 11% or so since January? Or is that something that American people who invest in the United States should not be worried about? The dollar has declined in value. Is that a concern of any of you, that the dollar has gone down in value, or not really?
It's a short window, David, and there's been dollar supremacy for a long time. You've given a little bit back. But at the end of the day, it goes back to this growth point. Where's the technology innovation and where's the growth? Technology innovation is central to growth. The United States has a very strong hand in that. Where's capital formation, the best capital markets in the world? The United States has the best hand in that. So while in the short term, there are reasons that some of the dollar dominance has moved back, when you talk to capital allocators broadly, and Larry made this point before, the vast majority of capital allocation, 50%, is going to come to dollars and dollar-based assets, given the economic position we have.
So a final question for anybody. Should I be buying cryptocurrencies or should I avoid it? Anybody think this is a great investment opportunity, or
if you believe that countries are going to continue to debase their currency, if you believe that there's going to be global rise of insecurity, owning crypto assets or gold are assets of fear. You own these assets because you're frightened of the debasement of your assets. You're worried about your financial security. You're worried about your physical security, and between crypto assets and gold, they believe there's a strong belief that is a good hedge against optimism.
Okay. Jamie, you were a little skeptical of crypto at one point. You're still skeptical.
I've gotten away with no damage so far. Crypto is real. If you mean blockchain, stable coins, you have a JP Morgan deposit coin, you can move stuff, smart contracts are real, all that stuff is real. It will be used by all of us to facilitate, better transactions and customer service.
If anybody wants a tour of your new building, what's the best way to get it? Call you directly?
Call me directly, yeah.
Right. You're easy to get a hold of, right?
Yeah, you'll get in, David.
Okay. Thank you all very much. Appreciate it.
Thank you.
Thank you.
Thank you, David. Thank you, David.
You're a very good moderator. Thank you a lot. Good to see you. Thanks a lot. Thank you. Okay. Well, so crypto is okay, right? Right. Thanks.
موضوعنا مفتاح الازدهار يشكل العالم، لأن الجميع الآن يسأل نفس السؤال: كيف بإمكاننا أن نبني مستقبلا أكثر استدامة وشملا وإنسانية؟ وبالتحدث عن الشمل، إن مبادرة مستقبل الاستثمار هذا العام أكثر شملا، حيث سنرحب بقادة المنتدى الاقتصادي العالمي. حان الوقت ليأتي ليرى بنفسه أنه الأمر هنا أكبر مما كان يتوقعه، وأرحب بهم هنا وأتمنى أن تستمتعوا كثيرا بكتيب الازدهار الموجود، كتاب الازدهار الموجود على مقاعدكم ومتاح كذلك كنسخة رقمية. وكذلك أشكر كل أصحاب الرؤى والمنظمين والمشاركين الذين شاركونا في معنى الازدهار الحقيقي، حيث في الأيام القليلة القادمة سنستكشف المسارات الجديدة للتمويل والإبداع والشجاعة، وهذا ما يمثله مبادرة مستقبل الاستثمار، أفكار تمضي قدما بالعالم. لكل قادة العالم والمفكرين والمبدعين أدعوكم لتروا هذه الفعالية ليست كمجرد فعالية، ولكنها حركة تدعم الحركة الجريئة في الصحة والذكاء الاصطناعي والتنمية البشرية. هذه المبادرة يمكن فقط أن تنجح إذا كان كل منكم أعضاء هذه الحركة أن تعتنقوها وأن تتبنوها وتجعلوها وكأنها أفكاركم. إن حركتنا الآن ليست مجرد حركة، ولكنها أداة جديدة، بوصلة جديدة لمبادرة مستقبل الاستثمار قمنا بإعدادها لكم. قوموا بتحميل البرنامج وأطلقناها أمس، وصدقوا أو لا تصدقوا في أقل من ساعتين كانت هنالك 3000 اتصال بالفعل حدث بينكم. لذلك بوصلة الذكاء الاصطناعي لمبادرة مستقبل.
To strategic trade. So some of the themes that were touched on with our board of change makers moderated by David Rubenstein, that these amazing trailblazing women are now going to discuss. We have Zani waiting here in the wings, and yes, go ahead. Zani Minton-Beddoes, a big round of applause for her, everybody, as she kicks off our first fireside chat.
Is my microphone working? Good morning, everybody. We are going to talk this morning about a topic that is in a fairly fragile state, which is that of global free trade. And so I'd like you to take part in a poll to set the stage for this. Shh. Could you answer this poll, please? The poll question is coming up right now. And the question is the impact of raising tariffs globally more positive than negative? So this is an intelligence test for you, because if you believe that tariffs are good, you should say yes. If you think that tariffs are bad, you should say no. Please vote, and we will discuss that later. And now I'd like to welcome for a conversation Dr. Ngozi Okonjo-Iweala. Come and join me, Dr. Ngozi. Dr. Ngozi, as you know, come on up. Come and join me. Have a seat here. If I could just get your attention, if you care about free trade, you should be listening to this conversation. And as your chairman this morning said, we need more open trade, not protectionism. So I suggest you listen to a conversation with a woman who is the global avatar for free trade. Dr. Ngozi, thank you for joining me.
Thank you, Zani.
As you know, Dr. Ngozi is on her second term as Director General of the World Trade Organization. You wrote recently that the global trading system has been jolted in the past few months. I think that's very English understatement. It's been quite severely jolted, and some would say that the World Trade Organization is on life support. How do you view the state of global trade?
Well, thank you, Zani. Let me just say this, maybe jolted. I'm not British. I would rather say disrupted.
Disrupted.
Yes,
okay.
I think that the global trading system is suffering the most severe disruptions in 80 years. And so there's no doubt that it's been bruised, as I said. I always say it's battered, but it's not broken. And the reason is this, you don't have to take my word for it. Just look at the analysis. The analysis shows that in spite of what has happened and the unilateral actions of the US, 72% of world trade is still going on WTO most favored nation terms. So yes, most people think global trade has been severely disrupted, which it has. But it is still, the fact that almost 3/4 of world goods trade is still going on WTO terms is amazing. It's come down from 80% pre-tariff to 72%. So yes, there's been an impact.
I think that is something that is worth dwelling on. Shh. Could I ask you to please keep your voices down? I think it is important that you can hear what Dr. Ngozi has to say. Shh. Shh. Thank you. Dr. Ngozi has just pointed out that over 80% of global trade is still under WTO rules.
No, 72%. It was 80% pre-tariffs.
So that is, you know, the United States is the world's biggest economy, but it is not actually such a big part of global trade. So that begs an important question, because the US has essentially said, we're not respecting global trade rules. Does that mean the rest of the world, if it would like to do what fight against protectionism, should go with the WTO Or should we think of free trade through regional trade deals?
Well, first, the US has taken unilateral actions because it has a set of criticisms against the system and feels the system has not changed or evolved in the way it would have liked it to. And it's made some of those criticisms about unfair trading practices, about not level playing field in the world trading system. It's not the only one, by the way. Developing countries have also said that the world trading system is not working for them as well as they would like. And whilst you may not agree with the US's unilateral actions, I agree with a lot of their criticisms that we need to reform the system. But we don't need to speculate because data shows what I'm telling you, that 72% of world trade is going on WTO terms because other members have not done a tit-for-tat retaliation with the United States, which is good. We don't want to go to what happened in the 1930s with the Smoot-Hawley Act and tit-for-tat. So I want to give all thanks and congratulations to WTO members because they are trading among themselves, they are respecting the rules. So they are not going the way of moving away. Look, let me say that the 72% may yet come down. I'm not saying that, if there are further unilateral actions anywhere else, it might come down. But it's amazing that the system is so resilient.
It is. It is true that I think if 6 months ago we had spoken, I would have worried about a much bigger hit to the global trading system. I would have worried about a decline into 1930s style retaliation, and we haven't had that because many countries, and in this region in particular, countries want freer trade. They do not want protectionism.
But can I say something, Zani? I have 166 members, okay? The United States trade to GDP ratio is 25%. So, it can live, it has a large economy, domestic demand is great, can live without trade. 142 of my 166 members have trade to GDP ratios north of 50%. So trade is existential for them.
But can you have a successful global trading system without the world's biggest economy actively taking part?
I think the US is actively taking part. The US is at the WTO, is still a member. It engages at the WTO, and I think what we need to work with the US on the reforms. And I think, look, this is where I see opportunity in this crisis, in global trade. So whilst we're sitting here, I think we shouldn't all be doom and gloom. There are parts of trade that are really growing. Services trade is growing at twice the rate, at about 4.3%. Goods trade is growing at 2.4% this year. Digitally delivered services trade is growing at 8%. So all of that green trade is almost 2 trillion. And I'm quite excited about that. What I think is we should listen to the criticisms, we should reform the system so we can take advantage of these new opportunities. And that's what we're working on at the WTO.
You raised a really important point. The WTO was created, in a sense, for a different world. It was a 20th century organization, and we are in a very dramatically changing world economy. Digital, services, AI. So what are the trade rules that we should all be pushing for to create an open system for the 21st century?
Well, I think we are working on rules for e-commerce, for digital trade. I think we should be paying attention for that. And a group of our members, almost 100 of them, at the WTO, you can make plurilateral rules by a group of willing coalition of members coming together, as well as multilateral, everybody involved. A plurilateral with almost 100 members looking at rules for digital trade is ongoing right now. And I think that's where we need to be focusing our attention. How are we preparing to take advantage of the opportunities that are coming up in trade?
So that's a really important point, that you need more agreements which are, as you say, plurilateral, coalitions of the willing, countries that want to have freer trade move together. Which areas are you most optimistic about having those significantly in the future?
Well, I think, as I said, coalitions of the willing that come together to look at digital trade, maybe green trade, which is growing. I just want to tell you something on AI. You know, we really need to be up to snuff. We've just done a study on AI. Do you know that the first half of this year, trade grew at about almost 5%. That's why we're projecting 2.4 for the entire year. But guess what was driving that trade? Trade in products relevant to AI. You know, 42% of the growth in trade in the first half of this year was driven by AI goods. So if we don't sit up and devise the rules that can make AI trade continue to grow the way it is, then we're losing time.
But what do you mean by that? Because AI is clearly, will be discussed hugely at this conference. It's the technology of our time. It's also a technology where there is a race. There is a race between the United States and China. And there is a concern, as you've written actually in articles, about developing countries falling behind. Given all of that, what are the rules you would want for trade in AI?
Well, let me say the good news is we already have an agreement that actually makes trade in AI flow. It's called the Information Technology Agreement, and it covers $3 trillion worth of trade in the semiconductors and computer equipment and all the things you need for AI. So that is good news. We are also, as I said, negotiating e-commerce. So we need to look at standards. We believe AI, one, will reduce the cost of trade, but will also change the nature of the goods we trade. And for that, you have to look at standards. And this is something that the WTO is very good at. And you know, so we need to focus our attention on how do we think about standards in goods that are AI infused or services that are AI infused.
Do you know, I hear you say that, and of course I agree. But then I think, where is the world's attention going to be? The world's attention is going to be on the meeting between President Trump and President Xi Jinping, because they are the two big economies that will set the rules. And I worry that you are pushing for useful things, but they are not where the center of the action is as regards global trading relationships.
Absolutely, I disagree with that completely, Zani. I mean, if we were not where the center of attention is, I don't think that China and the US will still be part of us at the WTO. They'll move. They don't need to be there. China's trade to GDP ratio is also less than 30%, but they're there. And you need to ask yourself why. So yes, it's also good to talk about AI and all that, but there's some parts of trade that are the plumbing of movement of goods and services in the world economy. And I think these two countries know it. China knows it, and the USA know it. But, you know, I always joke that the WTO and its rules and agreements are like the plumbing in your house. You ignore it until the pipe breaks and floods the room.
That is a metaphor I don't want to think about too much.
Well, just think about it. You don't think about the plumbing in your house until the pipe breaks and your nice Persian rug is flooded and ruined. That's the way. WTO has fundamental rules like customs valuation agreement, intellectual property agreement. What I love about this place now is business people are in here. They are the ones that trade. You and I don't trade. So they know what matters to them. And so China, business people in China and business people in the United States, they are support at the WTO.
We do trade. I sell a product across borders, absolutely. Let's find out whether this audience believes that the global tariffs were a good or bad idea. Let's get the results of the poll, which I believe are ready. So they've come up. 20% of you think, oh, phew. Oh, luckily, they're all free traders here. So that means 20% think the tariffs are a good idea. 80% of you think they're not. So we're starting, this is a friendly crowd.
It's because they're business people.
Absolutely.
You know, that's why I love being here. You know, they know what actually happens in trade. So they know what is good and what's not.
We just have 1 minute left. Given that you have a friendly business crowd here, and this is an action-focused event, things happen after this event. What is your wish list? What do you want these business people to go back and do and tell their governments needs to happen? If you could wave a wand, what do you need to strengthen global trade going forward?
I'll say two things to them. One, some optimism is warranted. Things are not broken the way people think. You know, just take away this number, 72% of global trade going on WTO terms. Two, but we need to reform the system. We cannot be complacent. So what I want you to do is to get your governments to support the reform at the WTO. We need to reform some of the ways we do business, like our consensus decision-making system, which is practiced as unanimity. Everyone has to agree, so it really slows down decision-making. We need to improve our transparency practices. For instance, we need to talk about the use of subsidies, whether they are new green subsidies or existing industrial subsidies. Industrial policy is back, so we need to talk about that. So there are lots of things we need to reform at the WTO. I want them to first bring their ideas for the reform. Some of them have been doing that. We just received the Kendaren from Japan, and they brought specific things they want to see in the reform. Bring your reform ideas and get your ministers of trade to have the political will to push for the reform. March 2026 at the WTO Ministerial in Yaoundé. Thank you.
Bring your reform ideas, and the WTO is alive and kicking. Dr. Ngozi Okonjo-Iweala, thank you very much.
Thank you, Zani.
Okay, Mohammed is the, just one at a time. Okay.
3, 2, 1, here.
Applause. Big round of applause for Sandy Minton Beddoes and for Dr. Ngozi. Can we hear that applause, please, ladies and gentlemen? Okay, I'm going to organize this auditorium a little bit. Everybody who wants to network, who is all the way over there, please head to the Grand Cafe. We want to keep plenary for these important discussions. We have incredible speakers, subject matter experts that have come from all corners of the world to be here and share their knowledge. So let's respect that.
एक विधान, एक निशान, one election, so গল্প দেন কেন?